The CNBC app. Global market news in one place. Customizable sections and personalized alerts. Stocks tracking, interactive charts and market insights all in your hands. Stay connected. Stay informed. Download the CNBC app today.
Very warm welcome to Scorebox Europe. I'm Steve Sedgwick with Ben Boulos, and these are your headlines. Another day, another circuit breaker on the Kospi. AI capex fears spilling across Asian equity markets on the back of a 5% slump in Nvidia shares that sees Apple regain its crown as the world's most valuable public company. Oil prices, well, let's take a look at this. Extending the declines from yesterday amid some form of hope that some kind of resolution to the Iran conflict will come about after President Trump says the countries are having good talks.
We'll see what happens. There's a chance we could make a deal. Without what we did, they wouldn't even be talking to us. They requested a meeting through their surrogates and directly. And we're meeting, and, good things can happen, I guess.
LVMH gets a lift as sales inch higher in the second quarter. US strength helping the company to shrug off weaker demand in Europe. Mercedes-Benz sees a boost in second quarter operating profit, but like its European peers, warns of intense competition and subdued demand in China.
If you have something that's really, really volatile and you say to an investor who's enjoying that volatility, I'll tell you what I can do. I can give you 2 times leverage on that. Oh, maybe they like it if they've got that gambling instinct. If you tell that same investor I can give you 3 times or 4 times or 5 times leverage, I'll say, yeah, I'll have some more of that as well. That is what we are seeing on so many of these markets at the moment. That's what we're seeing on key Asian markets. I'll show you the Asian markets. Let's have a look at where they're currently trading. The Kospi, of course, now deciding that they can have some form of regulatory oversight of the leveraged markets. But the second point I want to raise to you is I'm doing these headlines and I'm saying, oh my goodness me, look what we're seeing. We're seeing these big declines on a daily basis. Oh my goodness. So I have a question for you, the audience. What is the Kospi year-to-date down? How much is it down year-to-date? Because we've come off from 9,000 to 6,000. So we've come off aggressive. We must be down aggressively for the year-to-date for the Kospi, surely. Adam, show the board. Look at this. We are not down. In fact, if you go to the left-hand side of the screen, that says 4,000, right? Think about it. If any of you lot have been around longer than 5 minutes, any market that you've ever invested in that has put on 50%, having fallen, by the way, around about 33% from its high still, the numbers are stratospheric, and it just shows you the amount of gambling and the amount of leverage in these markets as well. Now, there are underlying stories, and we'll come to that because I've dragged Arjun out of the kitchen, and he's going to join us in a moment for this one as well. But let's just get into the story. A semiconductor sell-off in Asia this morning sparked, it appears, by a report in The Information that China has begun developing its own lithography machines. Lithography, a great word. South Korean heavyweights, SK Hynix and Samsung Electronics, are both down more than 10%. And the point is, by the way, those two together equal 40% of the Kospi, 40%. And you want to put leverage on that? Other big names in the region, such as Samsung, Tokyo Electron, and TSMC, also deep in the red. Trading on South Korea's benchmark Kospi index was paused temporarily after it slid by 8%. Shares of SK Hynix have plunged 45% from their all-time high in June as concerns about overcrowding, capex, and competition set in. Ben, let's just have a quick look at these US markets before we bring young Arjun on.
Yeah, it was a choppy trading session on Wall Street, and you can see there the Dow advanced 0.5%, aided by the fall in oil prices. A lot of energy-intensive names listed on the Dow. The S&P 500 managed to eke out the the slightest of gains just above the flat line. Look at that, the Kospi, the Nasdaq was off almost 0.2%, and that fed through into what we saw on the Kospi because it was chip makers in the US that were really creating a downward drag. So much so that Nvidia shares fell around 5%, dragging the market value of Nvidia, total market cap, below that of Apple. So Apple overtaking Nvidia as the most valuable company by market cap. There were other chip makers you can see on the board there suffering sharp falls, Advanced Micro, Micron and APP Materials. And so we've seen there the nervousness around the robustness of the AI trade, and that really set the tone for the Asian trading session. And we saw the sharp falls, Kospi even having to operate the circuit breaker after it fell by more than 5% for longer than a minute. But here in Europe, ASML shares shed more than 8% in Monday's session following reports that China is developing its own lithography machines. These are vital for producing semiconductors. It's an area of the market in which ASML has so far effectively held a global monopoly.
Arjun, thank you for joining us this morning. I know you're busy writing an article, but instead I've dragged you on to set. So thank you, I appreciate it. But we need your expertise. There's two things I can talk about. One, the volatility side of things. I want to park that for the moment as well. But this follows on this story about the DUVs, which are less sophisticated than the EUVs, which are the up-to-date ones that ASML are creating at the moment. But what it does do, it's another little bit of erosion in that moat around one of those key Western technologies that has seen the preeminence of companies like ASML as well. This is absolutely fascinating what China are up to.
You're exactly right, Stephen. I think the market reaction we saw is really a fear that actually a lot of these US companies, European companies that are part of this semiconductor supply chain, while they already have limits on what they can and cannot sell to China, that could be completely eroded over the long term, in that maybe that market gets completely shut out to them. And that's, I think, the bigger market fear around this story. But it's important to dig into this because you bring up a great point. These lithography machines are critical parts of the semiconductor manufacturing process. They're required to print effectively circuit patterns on silicon wafers, which eventually end up as the chips we know in our devices and in data centers and elsewhere. There are two types of machines, what you said. One is the DUV and one is the EUV, an extreme ultraviolet lithography machine. Now, these deep ultraviolet lithography machines are required for perhaps less advanced chips. And that the concern is that actually if China makes these machines, it's only a matter of time before it makes them more advanced machines. But I think it's really important to look at the nuances of this story, because you've asked me many times, why hasn't a Chinese company done what ASML can do? Because it's incredibly complex, and it's no different with this story as well. If we look at the details of the report, firstly, the scale was important. The information reporting that the unnamed Chinese company is looking to produce about 5 of these machines this year to ramp up to 20 next year, and that is going to go to China's leading chip makers. In comparison, 130 DUV immersion machines are expected to come out of ASML this year, with a 30% increase next year and a 30% increase the year after. The other important point here is a word called yield. It's a piece of jargon in the semiconductor industry, but it effectively means the number of usable chips coming out of a manufacturer. Now, yield is focused on so heavily by the likes of TSMC, Samsung and others when they're producing these chips, because they want no wastage, they want the max amount of usable chips. The question is, are the DUV machines that are coming out of China good enough to create the yields that these chip makers are requiring, and at least near or on par with ASML? Finally, is this a big threat to ASML? Right now, I'd say in the short term, no. Reason being is some of these immersion DUV machines are already export controlled by various restrictions from the US and the Netherlands for ASML. So they can't ship some of these anyway. So the machines China is producing are going to probably go to the Chinese fabs out there, the foundries, the manufacturers. So there's not a massive loss here right now for ASML, because those machines are just being sent to the Chinese fabs. So they're already supply constrained as well. So that is, I think, in the short term, no, but I think it shows you very clearly the trajectory that the Chinese semiconductor industry is. And this is just one breakthrough we've seen over the last few years in the industry. And the question is, how far does China go with this?
Firstly, thank you. You are quite brilliant at your craft. And you've just explained a lot of very complicated things very simply for me, and I think for our audience also. So thank you. That was absolutely brilliant. Here's the thing. You said many, many brilliant things, but you said unnamed companies.
Yeah.
The thought of such a complex bit of technology being produced by unnamed Chinese companies, even if they were named. And I did this game yesterday, and you weren't on set. I did this game with the viewers yesterday. It said hands up who'd heard of CXMT beforehand. And a few of them lied and put their hands up. I could see them. They think I can't see them. I've got little cameras. But I put my hand up. I'd never heard of CXMT. Yeah. And I asked them how many had heard of Kimi K3 or Kimi the company before last week or so. Again, a few of them lied, but not many of them heard of them. And the same could be said for DeepSeek a year ago as well. China is churning out high tech, nearly competing or absolutely competing companies, it seems, on a regular basis. So this hegemony that we've been seeing from Western and US companies is definitely under threat. It is, whether they're behind or at or ahead, it's under threat. And what adds to the toxic mix for me, coming back to a little bit to the markets, is that they're under threat from unnamed or named, or we don't know who these Chinese companies are, but my goodness me, they're coming up the rails. At the same time, when we have stratospheric valuations on certain parts of the US tech stack, that is what is creating, for me, quite a toxic mix on the valuation. And then add into that the leverage plays that we're seeing in some of these technology stocks. And for me, I think it sounds mildly concerning. I know others out there say it's a brilliant buying opportunity, and good luck to you all, by the way. If that's what you do, you have your rights. It's my job as a journalist to say what the factors are and why I'd be concerned. But more importantly, what do you think?
One of the points the market should understand about China is these things don't just come out of nowhere. DeepSeek didn't just come out of nowhere. And from my time living in China, reporting on the tech industry, I was there for 3 years in Guangzhou, traveling around all of China, all the key tech hubs like Shenzhen, up in Beijing and Shanghai, visiting all these companies, seeing what was going on. There is a lot of work that happens behind the scenes that you don't hear about on purpose. China doesn't like to make a big, show and dance about what they're up to at this point, for multiple reasons. One of those is for fear of sticking their head above the parapet and getting hit with some sort of US export restrictions. That is a key concern. There are multiple other reasons as well. So these things don't just happen. There is a lot of work that's happening, and there are a lot of brilliant, smart engineers who've worked at US companies, who've worked at European companies, who are back in China, who are building companies or working as part of the companies that are trying to build out this homegrown tech stack in China. Now, if you look across the board, you mentioned interesting points. You mentioned about CXMT on the chip side. You mentioned about Kimi. There are varying degrees of success across the Chinese infrastructure stack right now. When you look at the models, brilliant. There is a lot of great work happening there, and you're seeing Chinese models on par, if not surpass in some part, what is coming out of the frontier labs over in the US. The semiconductor industry is a lot more difficult because it's an engineering challenge where there are deep moats and deep expertise, but you are seeing certainly signs of that hegemony you mentioned in perhaps US companies or some of the companies out of Korea and Taiwan starting to slightly fray at the edges, right? You look at CXMT, this is a memory company. Right now, the market's been focused on SK Hynix, Samsung, and Micron. Those stocks have rallied astronomically on the basis that these are the three key players in the market around memory. But actually, CXMT, whilst it does not have necessarily a competing high bandwidth memory product, etc., it does have products that are usable within the Chinese ecosystem and stack. And that's key because this is a huge market. China is a massive market. And so if there are players that can service that market to a near good enough extent or good enough extent, they will. And Huawei is a great example of that. You look at what's happening in terms of the infrastructure build. So much of that now is being built on Huawei infrastructure. Is it as good as Nvidia? No. Is it as power efficient as Nvidia? No. It doesn't matter. They're stacking up loads and loads and loads of servers because they can.
That was quite brilliant. And I challenge anybody watching the last 13 minutes to not have learned something from you as well. So will you do me a massive favour? I know you've got to go away and write your article. You know what I'm going to ask, don't you?
I'll be back.
Promise? Oh,
promise.
Very Arnie-like. Yes,
Yeah.
I'll be back. Arj, you are a genius. Thank you very much indeed for that. Moving on, President Trump expressing optimism over the war in Iran, saying talks are underway while still insisting he's ready to resume attacks if they fail. His comments come as Washington halted its military campaign on Saturday in order to pursue diplomatic efforts. And as reports swelled of munitions supply concerns, Tehran appeared to test the unofficial ceasefire Monday, with Saudi Arabia, Jordan and Iraq all reporting drone attacks. Speaking aboard Air Force One yesterday, the president insisted that US stockpiles, which is a very contentious area, are in very good shape.
Pretty much destroyed their military. They want to meet, and we're meeting. We'll see what happens. There's a chance we could make a deal. Without what we did, they wouldn't even be talking to us. They requested a meeting through their surrogates and directly. And we're meeting, and, good things can happen, I guess. Oil dropped very big today. Stock markets, as of about an hour ago, was like through the roof. But no, they requested a meeting. They would not have requested the meeting if we were doing poorly. The only reason they want to meet is because we've been hitting them very hard.
Well, the conflict is entering its 6th month, with the two sides appearing to be talking but remaining at odds over who would control the Strait of Hormuz. Meanwhile, the Israeli Prime Minister Benjamin Netanyahu has arrived in Washington, D.C., expected to meet President Trump at 11 a.m. local time in what will be his first White House meeting in 5 months. Well, let's get the very latest now from Dan, who joins us from Abu Dhabi. Dan, just bring us up to speed on the latest in terms of where things stand this morning.
Ben, good morning. Well, I wanted to update you on an interview that the president has done with Axios. President Trump telling Axios he paused these strikes against Iran to give diplomacy another chance, effectively confirming the reporting that we've been bringing to you through the course of this week. President Trump, of course, meeting Israel's Prime Minister Benjamin Netanyahu at the White House later today to discuss what could be next steps in this conflict. But he also made it clear in this Axios interview that his window for diplomacy with the Iranians is short. The president was asked how much time he would give Iran, and he said not much. And if it fails, then the US will go back to very strong military action. There are some signs of regional diplomacy. Axios also saying talks now ongoing between Iran and Oman on reopening the Strait of Hormuz. Those talks reportedly also involve Qatar, Egypt, Pakistan, and President Trump's envoys Steve Witkoff and Jared Kushner. Oman's foreign minister saying the goal here is to develop practical, fair, and sustainable arrangements for maritime navigation. A US official telling Axios that the two sides still remain far apart on fees and no agreement has been reached. There's also no suggestion that the US would support any Iran and Oman deal to reopen Hormuz under their own conditions. So we're watching and waiting to see what comes of those talks. Meanwhile, also in the region, Saudi Arabia says it intercepted drones aimed at its oil facilities, and it's pointing at Iraq. Riyadh says these drones were launched by Iran-backed militias inside Iraq. It's now demanding Baghdad take all necessary measures to stop its territory being used as a launch pad. However, the Iraqi militias have not claimed responsibility, and that's what's most interesting about this. Yemen's Houthis actually say they attacked Saudi oil facilities, so it's unclear who actually launched these drones. Iraq's Prime Minister Ali al-Zaidi ordering now an investigation, saying Iraq will not allow its territory to be used against friendly countries. With that, it's back over to you.
OK, Dan, thank you very much, as ever. Still to come on the show, Dior drives demand recovery at LVMH in the second quarter. We'll take a closer look at the numbers right after the break.
Executive Decisions is the new podcast from CNBC, where I ask powerful leaders about their decisions that changed everything. I'm Steve Sedgwick, and here's the CEO of Siemens Energy, Christian Bruch.
Business leaders should not stay quiet in a world which is super complex. We sit in a privileged position, and we have to use that to ensure that a society remains prosperous, stable, successful.
That's Executive Decisions with me, Steve Sedgwick. Get it wherever you're listening to this.
So that negative sentiment that we've seen in the Asian trading session filtering through to the European futures, all of the key benchmarks being called lower. We are about 40 minutes away from market open. As ever, we'll bring that to you as it happens and talk you through the key moves in the opening moments of the trading day. In the meantime, let's focus in on some earnings because LVMH sales rose 3% to 19.5 billion euros in the second quarter, slightly ahead of expectations. Revenue at the luxury conglomerate's key fashion and leather goods business rose 1% in the period, helped by a recovery in demand at Dior as well as Louis Vuitton. Geographically, growth was driven by the US as well as Japan. Despite a pickup in demand, though, LVMH stock is down more than 27% year to date, underperforming its key rivals such as Hermès and Richemont. Charlotte joins us now with more on all of this. Charlotte, just talk us through this latest update from them and whether it's enough to move the needle for investors.
Yeah, we're looking at some of the first analyst notes that came out. They said maybe this is the start of an inflection point when we see at these results there for LVMH. We were saying up 3% on an organic basis. It would have been 4% without the headwind from the Middle East, according to the company. But certainly, there are some very positive signs. Looking at Asia, excluding Japan, up 4%. So that's less than the previous quarter, but still some growth. And we know how important the Chinese market in particular is. But growth that's very much driven by the US there. The sales were up 6%. Certainly a big acceleration compared to the previous quarter. They say great momentum with local and the tourists as well. Now, looking at the fashion and leather division, which is the biggest division of LVMH, that was up 1%. So they had 7 consecutive negative quarter in that division. They finally broke this with this growth of 1%. But here again, very much led by the US buyer. They said the Americans grew double digits for that division. And we know that the big revamp at Dior basically seems to be bearing fruit. Jonathan Anderson, the new creative director, creating a new demand there on that front. Another positive note was the wine and spirits, a division that has been struggling quite a lot in the past few quarters. There's been a big restructuring in that division, and we see some sales recovery both in champagne and in cognac. There, the sales were up 5%. Finally, watches and jewelry up 11%. And here again, echoing what we heard from competitor Richemont as well. We know that jewelry is part of the luxury that is doing the best, and so there with Tiffany and Bulgari, they say things are doing particularly well in the US, Japan and South Korea. So here very clearly you see a connection with the stock market boom thanks to tech, and you see the spillover into luxury there as well. So operating profit, operating margin, both better than expected. So overall, we see certainly some positive signs. But here again, you have to wait. Is that a long-term recovery for luxury, given that clearly the boom in the US, the connection with the stock market seems to be very clear here. And that's what we heard from Luca Solca from Bernstein this morning. Say, look, if we see the stock market slowing down in the second half of the year, or that tech bubble bursting eventually, then that's when we might see an impact when it comes for the luxury players. But certainly, again, we see this is a stock that has been suffering. It's down 27% year to date. So that's more than some of these other luxury players. We have Kering and Hermès reporting over the next couple of days. So 2 very different stories, the high end of luxury and one that is very much the aspirational buyer and a turnaround story. So we have to wait to see what we hear from these guys and whether we see on their front as well a little bit of growth coming back for luxury overall. But certainly some positive signs here with LVMH reporting last night.
I have a confession to make.
Go ahead.
I have never seen Succession. Now, I know.
No, I haven't either.
Wow.
No. It's been highly recommended.
You've watched it?
Yeah.
You loved it?
Yes.
So a quick
it's
question.
a hard watch because they're all extremely unlikable.
I was going to say that's why I didn't watch it, because I watched the first episode and I didn't like anyone.
No,
I kind of want to fall in love with the characters. A bit like on my own podcast. If I don't like them, I don't want them on it. Yeah. But I'll tell you, the reason I mention this is because the LVMH CEO, Bernard Arnault, seems to be changing tactics on his public image. In an unusual move earlier this week, he wrote on X for the first time, reposting an open letter he wrote to the French newspaper Le Monde after a series of articles. Apparently they spent 6 months, 6 double-page spreads that alleged there were tensions within his family about succession plan. Arnault then thanked those who reached out to him after the letter was published. Oh my goodness me. There's only one thing better than watching unbelievably rich people from the outside. It's watching them air their dirty laundry in public. What's going on, Charlotte?
Well, it's certainly a change of tactic for
Have you
Bernard
read the Le Monde
Arnault.
articles?
I haven't read in detail. I've read the book that was written by the journalist who led this series that she published a couple of years ago about these big rich families. It's called actually Succession, about the different families in France. Again, the new strategy from Bernard Arnault, who's been very quiet in the media for all these years, and so now suddenly coming out, standing up on X and publishing this letter. So kind of, I guess, bringing more of the light on this saga. But look, a very sarcastic kind of letter, quite funny at times, quite brutal as well. Interesting that Le Monde's actually led the main shareholder, Xavier Niel, who's the partner of Delphine Arnault for many years. So, interesting, certainly at the dinner table. There might be some tensions there. But, some funny comment. We say, apparently I am the head of the last royal family of France. I learned that while reading Le Monde.
Well, the last one didn't go too well.
We say in the past he used to be called the Terminator, so he preferred to be called the last royal family. He said it's more elegant, it's better for the sales at Dior. So some funny notes there as well. But on a serious note, the question of the succession at LVMH is a real question for investors, and that has been coming to the surface many times. They raised the age of the CEO to 85 recently so that Bernard Arnault can stay in the job. We know the 5 children of Bernard Arnault are in the business, in leading different parts of the business. But shareholders want some visibility on what is a succession plan. And while there is no clear succession plan that is published, like LVMH always say, there is a plan, don't worry, we're just not publishing it. While it's not made public, it feeds this narrative that there are some tensions, that the children are fighting against each other to get in the lead and to get the favours from the
Stand aside,
patriarch.
Murdoch's, the Arnault's got this story
Well,
now. Same story.
Yeah.
Amazing. Do I need to read the book, or shall I just read Le Monde, or shall I just watch Succession?
And if you enjoy it, I guess you can go
do a bit of everything. Thank you very much indeed. Wow. What a rich bench we have of great correspondents, from Arjun to Charlotte. Thank you very much indeed. Barclays shares have had a massive... So their 52-week low is 352. They're trading at 530 pence. They're up 11% this year as well. And, well, look at these numbers. Another £1 billion buyback above forecasts of a previous expected 831. Raising full-year income guidance to 31.5 billion from 31. £4 billion of second quarter income. That is above expectations. A 17% rise in first half profits as well. Again, we're seeing, once again, the banking sector producing bumper numbers.
An update from Unilever as well this morning. Consumer goods giant beat its second quarter sales growth estimates. It was higher volumes and higher prices. Its home care and beauty brands benefited from households sticking with their favourite brands despite uncertainty in the bigger picture in terms of what's going on geopolitically with the Iran war. Of course, there was all of the interest around the combination of its foods division with McCormick, the US spice maker. An update on that. They say that tie-up expected to be complete by mid-2027.
We're going to take a very short break. Quick look at the futures to break as well. We are seeing, there you go, modest moves on the European markets. I have got an old friend, a brilliant ex-colleague actually in many ways, brilliant CEO joining us around the set, and you will learn an awful lot about what's going on in the world of energy and how it transcends the world of power and AI and geopolitics in a very short while with Lorenzo Simonelli.